Morning, everybody. It's 8:10 a.m. It's May 27th. Welcome to my channel. Now, of course, this market is nuts. So, Trump probably caused the bond market. I think he even said that got nuts. He paused these EU tariffs and it's causing the market to rip back up. All right. So, he's done this before, and that bond market's probably scaring him a little bit. So, that's what's going on in the market. Now, he was throwing that EU tariff on Friday, markets gap lower, and then towards the close went right to the mid of the session. So that was looking pretty like we were going to probably take another leg lower, and then of course we got the pause. All right, so that's kind of what we're dealing with today. Now we did bounce off key levels, and I mentioned that last week. I said probably not a fan of any shorts, especially with the SPY sitting on top of the 200-day moving average. Okay, I had a nice long trade in the QQQ on Friday. Go over that slightly. So that was a nice trade, and then I was done for the weekend. Um, so without further ado, why don't we just get right into it? Welcome to my channel. My name is Steven Gonzalez. I use market profile and volume profile to find structure in the markets, along supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. All help me find structure. That's my edge in the markets, along with anchor view ops, and of course my trusty market internals, right? That let me know what the market's capable of, because the market cannot outperform its internals. Okay, so that's my bread and butter. All right, hopefully you guys can join me every morning while I give you the market story, the news, the leaders and the laggards, the economic calendar. All right, we'll go over the earnings for this week, and of course the daily charts and my triple-headed monster, that's your bond market, your dollar, your VIX, and I give you long and short trade analysis on the ES and the Nasdaq futures. Okay, now once the market opens, there's new data, right? And that's where I lean on the market internals. And if you go and join my Discord, okay, if you go and join my Discord, Confluence Trading, that's on my YouTube homepage, then you can join me and you can get my updates on what I'm seeing in the markets. Okay. Now, without further ado, let's get right into the watch list here. Futures, let's see what's moving markets, all right? So, let's see who's leading the pack here. Ethereum's up 3.10%, Russell's up 1.56, Nasdaq's up 1.52, ES up 1.41, and the Dow's up 1.29, Bitcoin's up 0.93. 30-year bonds are being bought today. Okay, 30-year bonds are being bought today. They went up to a 5% yield. Okay, that's pretty nice return. Okay, so the dollar is up 0.45. Crude is down 0.57. The VIX is down 0.83. 10-year yield down 0.82. Silver's down 1.53. And gold, your laggard today, down 2.17. Okay, down 2.17. Of course, with the dollar rising, right? Moving on to the Mag 7 Plus here. We have AMD. AMD is up 3.40%. Okay, NVDA reports earnings after the close tomorrow, up 2.49. Tesla had weak sales, and they are still up 2.23%. Meta's up 2.06. Coinbase is up 1.98. Broadcom up 1.87. They got earnings coming up as well. Let's see. There's earnings on June 5th. All right. Just wanted to make sure. All right. Apple. They just had good news from India, so they're up 1.66. Amazon's up 1.50, Boeing up 1.48, JP Morgan up 1.43, GE up 1.42, Google's up 1.38, Microsoft up 1.15, Eli Lilly up 0.82, Netflix up 0.73, and Berkshire Hathaway's up 0.64. Nothing's down, right? This is expected when you have a gap up like this, okay? So, moving on. All right, moving on. Two sectors. That's the guts of the market. That's how I base my market internals. Remember, off the open, not from the previous day's close. So here's semis. There's your risk off, risk on indicator. Okay, so that would be risk on. They're up 2.03%, followed by technology, the largest weighted market cap sector in the market, over 30%, up 1.70. Discretionary up 1.40. That's your Tesla, your Amazon, your Home Depot. Financials 1.28. Berkshire Hathaway is the largest holding there. Okay, XLI, that is your it's up 1.24. Your GE, your CAT, your Boeing, your Uber. All right, real estate up 0.29, up 0.96. Healthcare up 0.89. Communications up 0.89. Up, that's your Google, your Meta, Netflix. Utilities up 0.85. Basic materials up 0.72. Energy is up 0.62, and staples is up 0.28. Everything is up. Okay, it's a broad market rally. All right, and we'll get into the hourly charts where we're not at the best location right now. I'm not a fan of it. Okay, so without, let's move on to the economic calendar. All right, let's look at the week here. Now, of course, it's Tuesday. We got a shortened week. What do we have today? Well, Kashkari already talked at 4 a.m. Okay, 8:30 durable goods. That doesn't really move the markets much. 9 a.m. Case Shiller. That doesn't really move the markets. Consumer confidence at 10 a.m. Okay, that possibly can. So 10 a.m. I have an alarm set. 10 a.m. news today. Okay, Dallas Fed at 10:30. That typically doesn't move the markets. 8 p.m. Fed Williams. All right, Wednesday you got FOMC minutes at 2 p.m. Okay, you got the 30-year mortgage at 7 a.m. API crude. Now Thursday GDP. You got Fed Barkin speaking, initial jobless claims, pending home sales, fell Goolsby. So Fed speak this week. All right. And you got crude inventories at noon, which is usually generally at 10:30 on Wednesdays, but since we have this shortened week, it's on Thursday. Friday is what really probably the bigger day of data with the core PCE. All right, the core PCE at 8:30, and then at 9:45 you got Chicago PMI, and at 10 a.m. you got Michigan consumer sentiment. That will move the market. Okay, followed by Fed Bostic. That's what's going on as far as the economic calendar. As far as the earnings calendar, we have the big one this week. Okay, before the open today was AutoZone, right? After the close today, you got Okta, Box, right? And then before the open tomorrow, you got Dick's, Abercrombie and Fitch, Macy's, so some retail. Okay, after the close tomorrow is the big boy: NVIDIA, Salesforce, AI. Okay, Viva, Sentinel One. That's cybersecurity. Now, before the open on Thursday, Foot Locker, Best Buy, Kohl's. So you got a lot of retail this week. Hormel Foods, Burlington, right? After the close, you got Marvel. It's a semi. Costco, Dell. So some decent ones this week. Ulta, Gap, American Eagle, NetApp. Before the open on Friday, Canopy Growth. And that wraps up the earnings for the week. Okay. Now, talking about some news for some stock stuff today. NVIDIA stock rose 2.5 ahead of its quarterly earnings on Wednesday, with investors looking for answers on how much U.S. chip curbs on China will cost the chip giant. Apple stock rose 1.6 as the data showed that U.S. phones shipped from India in April reached roughly 3 million, up 76% year on year. PDD holdings, they fell 17%. The Chinese e-commerce company missed estimates. Trump stocks surged 8.9 after a report said Trump's social media firm planned to raise about $3 billion to spend on cryptocurrencies such as Bitcoin. Tesla stock rose 2.2 despite data showing European sales nearly halved in April from last year, falling for the fourth straight month as a backlash against CEO Elon Musk's political views. Southwest stock rose 2.9 after the carrier announced it will charge customers $35 for one check bag and $45 for the second. Wow. Salesforce stock gained 1.5. The Wall Street Journal reported that the software company is nearing an agreement to acquire Informatica in a deal valued at approximately $8 billion. AutoZone stock rose 0.9 after the auto parts company reported a surge in quarterly sales while expanding with 84 new stores. AMC Entertainment stock surged 4% after the cinema chain set weekend records for the Memorial Day holiday for admissions revenue, food and beverage revenue, and overall revenue at its domestic locations. All right, moving on. We're going to go into some more news here. All right, let's see here. Let's see. Texas poised to enforce age verification on Apple and Google App Stores. Tesla misses out. We already talked about that. Southwest, we already talked about that. All right, here let's get into something Else stock futures jumped over 1% as traders returned after a long weekend that saw tensions between the United States and the European Union cool, with U.S. President Donald Trump restoring a July 9th deadline for trade negotiations. European shares extended gains led by defense stocks. In Asia, Japan's Nikkei reversed early declines to end higher as a weaker yen and falling yields on super long-dated bonds lifted sentiment. The dollar strengthened against its peers, pushing gold prices lower. Oil prices inched up on easing trade war conditions, but investors eye upcoming OPEC Plus meetings where the oil bloc is expected to raise production. All right, now if there's nothing else shocking in here, we're just going to move on. Let's see. Autodesk Berenberg raises target price to 325 from 299. CoreWeave Barclays raises target price to 100 from 170. Target Guggenheim cuts target price to 115 from 155. Targets missed, didn't have good earnings, so they're getting target lowered there. All right. Now, what we're gonna do, we're gonna get into those breadth charts. All right, we can get right into those breadth charts, and this is coming perfect timing. Okay, I've been talking about one of my just simple breadth charts to figure out what the market's doing. Are we overheated or not? This is the S&P 500 and the percentage of stocks above the 20-day simple moving average, right? What did I say when we were up here? Look to the left. That's usually a frothy indicator, right? Usually frothy, and you get a dip. Look at the S&P right here. Boop, dip. Come up into the 90s. We were up in here into the 88% of stocks were above the 20-day simple moving average, and now we're down to 49%. So that has been cut in half. Okay, that will probably rise back up today, but there's your little frothy indicator. All right, now moving to the bullish percent index. Okay, moving to the bullish percent index. This was frothy. All right, we were up into the 86% of the NASDAQ 100 were in buy signals. Now we're down to 78. Remember, I was talking about this frothy signal. Frothy signal, right? If we go to the AI investor sentiment, okay, we look at the bulls. What percent of these investors are bullish? We were all the way down here at 18%. Now we're back to 37% basically of the investors are bullish. All right, let's look at the bearish. All right, that was also very high. 62% of investors were bearish. Now it's only 36 are bearish. So you're at pretty much the same amount of investors are bullish and bearish. Okay. Those are our breadth charts. Always well to look at those, okay? Now, we can get right into the dailies. All right, we get right into the daily charts and see what's cooking here with those daily charts, okay? All right. Looking at SPY here, all right? Now, here's that primary trend line. We closed right at that trend line on Friday, right there. Okay, broke it. And what did we do? Let's get like really close here. 200-day moving average. That's where the market opened at. And the 100-day moving average and the 20-day simple moving average, okay? I was not about to go and fade that move. That is, I thought about it. I was like, I'm not shorting there. That's probably going to get bought up a little bit. And it did. Okay, we did go up higher, but then we closed in the mid of the session. Okay, now with that being said, where are we now? 587.40, let's call it 587. 587.40. So we are all the way up here. So we are above Thursday's highs, which is nuts. Okay, which is nuts. Okay, had a little bit of a downtrend here. Remember this big channel, right? Let's look at a better look here. Futures, just see the price action in its natural form of actually what is going on. So you could see in futures, we went up to last week. We went up to the previous week's highs. That was resistance, right? You went down to where? The previous month's highs. Those are the whites. That's the previous month's highs, right? You hit the 20-day simple moving average. You bounced up, and now we're above the 100-day moving average and the 9 EMA daily. Are we going to reach back up to this resistance level around 59.80? Maybe. Okay, maybe. I don't know. Trump is saving that market here, right, by pausing those tariffs. Excuse me. All right, let's look at the cues. Let's look at those cues. All right, so remember I was talking about the cues that they were relatively stronger in structure. They weren't even touching the gap. They never came close to the gap like the ES did. Okay? And let's see what we did. Okay? We opened here, went all the way up to the 90-minute daily, caught some resistance there, closed at the mid of the session. Okay? You can see, again, last week's highs were resistance for the market. We didn't go back to the previous week's lows, but we did go down, okay? But it just wasn't as violent as the SPY, okay? Where are we now? We're at 5, let's call it 517, all the way back up here. Crazy markets, all right? We're right in here. We're right at Thursday's highs, basically. A little below it now. We're right about here. All right, let's look at the live look of futures. Alrighty, this is futures. So remember what I said. I go, wow, look at this. It would have to take this out, this candle here, to even think that, oh man, this is in bad shape, right? Well, Nasdaq didn't get that weak, right? And now, look, didn't even hit a major moving average like the ES did in the SPY. Didn't even hit it, all right? Above the 90 EMA daily. Like I said, look, you're right at Thursday's highs. And you know what you are back in? Kind of in like a balance area, which is why I don't like where we're at. Okay? You can get chopped up here, right? You're looking just to get chopped. Okay? I'd rather be on the edges. All right? Now, moving on to our triple-headed monster. We got to look at that bond market. All right, the squirrely bond market here. All right, now we're finally getting some bonds being bought here. You hit up to that 4.62 yield. We're coming back where? To that anchor VWAP of 2025. Keep playing around this anchor VWAP of 2025. You are in an uptrend here. You really need to take out last week's lows to start moving lower. Right? Once we get up to here, that is not going to be good for the stock market. Okay, you need the yields to just relax, calm down. Okay, TLT is at a very, very key support level, and it has been. You can see there's been like a reversal kind of bar put in there. We look at TLT. I actually added to my position. So if you look at TLT, look at this low here. See how we hit that right there, right my level, right there, and whoop. I mean, now where are we at right now? 85.22. We're about right here. Okay, so I like that play. Not more of as an investment, more of as a position trade. But that's the 10-year yield in TLT. So I think you're going to get, I mean, look, you just ripped down to that level. I think you're going to get some profit taking, and then I don't know. The bond market's very unpredictable. All right, it's doing things that it usually doesn't do. So here's your dollar. Now your dollar broke this little uptrend it had. Okay, so we can get rid of that. Okay, tried to break that downtrend, couldn't, and now we're finding ourselves here, right? Where are we at? We're at last week's. We're above last week's lows. Okay, so does this become a swing low? I don't know. I don't know. All right, moving on to VIX, and again, this is your triple-headed monster. I'm not sure if I put that up there. Let's move on to the VIX here. That's your fear gauge. Now the VIX, remember, is 30 days out of fear, 30 days out hedging, whatever you want to call it. All right, we are in the 20 VIX. All right, you can see here, this is last week's highs, last week's lows. Last week's highs, last week's lows. Remember, the oranges are always that. Whites are monthlies. So we're just in this kind of range now. Okay, you can see we hit the 100-day moving average. The 50-day moving average. And we're right here. So volatility stays elevated. That means larger ranges. Remember, a 16 VIX is about a 1% expected move in the S&P 500. A 1% 1%. I'm sorry, 16 VIX is a 1% expected move in the S&P 500. So expect a larger move than 1% today in the range. Okay, in the range. Moving on. Now we're going to go back to the 1 hour charts, and we're going to go over what's really been driving a lot of my trades. And hopefully you guys are getting these levels and getting a lot out of them. I really think this is very important to do. Okay, here's your 1 hour chart. We're going to do the ES and NASDAQ, and a lot of things have happened. Okay, let me get my trusty marker out. All right, let's look at the structure. Now, this downtrend was broken. All right, this is where my levels of the most traded prices, when I say I do the most traded price of the year, the month, the week, and the previous day, right? This is where all that comes from. Okay, this turquoise box right here is the most traded price of the month. That is your 59.08. Notice where the market stopped dead in its tracks, right at the most traded price of this month. Okay, now the most traded price of the rolling year has now moved. You see this right here, 58.21. That is now your most traded price of the rolling year. Okay, you can see the big spike here, right? It's the most traded price. All right, so we go below that, no bueno for the market. Okay, no bueno. Now, the near term big level is the 59.08. The market needs to prove itself and find acceptance above this levels for us to move higher. If it's failing, like it is right now, it breaks this little uptrend, and we start to take it. If you take out these lows around the 58.60, right? Now, why are those lows important? Right here, this swing low right here, right? What does that line up with? 58.60 is your most traded price of the rolling week. Okay? This is all about the VPOCs. Right? If you hear me say VPOCs, most traded prices, they're magnets in the markets. Okay? And when they're together, I mean, sometimes they're over each other. 59.08 was ultimate balance. I call it ultimate balance is when they line up together, the most traded price of the week and the month. This is pretty much ultimate balance, just a wider range. That's why I don't like where the market is. I don't like it because when you're in the most traded price of the month and the week and you're in between them, right? The market tends to chop around a little bit to figure out what it's going to do. So picture this area, right? Like a big dividing wall. Below its bears, above its bulls. So market needs to find acceptance above those levels or find acceptance below those levels. And then it has to contend with that most traded price of the rolling year. If it goes there, then maybe sell in May and go away, rears its head, we bottom in June. Okay? That's the seasonality. Okay? Now, what's important here is remember this anchored VWAP. This is the US China trade deal when we gapped up, right? That was support, support, support. Look at the support at that level. Then we finally broke it. Okay? We broke it with the bond market, right? And so we were staying under it. And then the EU tariff news came out. And we really broke it, right? We broke the month-to-date VWAP here, right here as well. Well, guess what? We're back. And look what's causing support. That anchored VWAP. So buyers are back of getting paid from the US trade China deal again. Okay, that's why I love the anchored VWAPs. It just tells you a lot about what the market's doing. Now I threw an anchored VWAP at this low. Support here. Support now is at that most traded price of the rolling year. As long as we keep going, this will rise. So I'll just keep an eye on that. Okay, those are the levels I'm looking at. Now, moving on to the NASDAQ. Remember, one thing I'll point out too, this has an inverse head and shoulders here. A shoulder, a shoulder, a head. This was your neckline right there. And we broke it right there. Okay, so an inverse head and shoulders pattern did show up. I'm not a big pattern guy, but you can't deny that pattern. Okay, moving on to the NASDAQ. Let's look at those together. Okay, so a different structure. They do have this inverse head and shoulders. Okay, you broke this little downtrend that we were in. Now look, you still have that inverse head and shoulders. Now, the inverse head and shoulders here isn't as clean because you kind of got a shoulder, a shoulder. I'm sorry, a shoulder, a shoulder, a neckline that's kind of like not really broken yet, and a head. See, the ES has broken it. So, like I said, I don't put too much weight into it, but you can't deny the pattern. Okay. Here's the US trade China deal anchored VWAP. Support, 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 broken, broken, right? Well, guess what? You're above it. Those people are still getting paid now. Okay. I threw an anchor VWAP from this swing low here, and let's see what this does with this market. Okay. Now, the big level on your map here, 214.35, that is your most traded price of this year of 2025. NASDAQ needs to prove itself and find acceptance over it in order for me to get bullish. You stay below it, and look, it's the same thing here. Remember the ES? I'm trying to see what level this is exactly. Let's call it 21240 is the most traded price of the week. So you notice how these big levels, the market is sandwiched in between them. I don't like it. I don't like it. I'm looking to get chopped up here. It just means that the consensus is trading around these levels. This is the most traded price of the year. This is the most traded price of the week. We're in between them. Ugh, I don't like that. I don't like that because when you're, just look at it like this. Whenever you're in between these levels or on these levels, think about it like this. It's like the market hasn't made its mind up yet. That's how you have to look at it. Like it's confused. It needs more information in order to move, right? So find acceptance here, bullish. Find acceptance down here, bearish. That's how you look at those. That's when I say I use them to find structure in the markets, right? When I say that, that's what I mean by that. I'm looking at this as okay. I'm in the middle of a chop. That's the structure I'm looking at. Chop, 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 right? All right, moving on. Moving on. We're going to move over to that futures analysis, okay? Like I said, very important to look at that stuff, what I just did. I always take that in. You always got to take that stuff in. All right. Let me switch up my workspace here, and we'll get into the futures analysis. And of course, we'll analyze the profiles. We'll do all that jazz. Okay. And here's our good old market profile. Fine profile analysis, okay? Now, what I did do, because there was a session yesterday in futures, but it's like a little crap session, right? So what I did here is I will remove the merge. See this little crap session? I don't really care about it, so I merge it. Okay. Oh, sorry. Not that. So I make it part of really like Friday's session. Okay. So let's look at our little profile here. So here's a little excess here. We got value here. We got a little excess to the bottom, right? Kind of balancy looking profile. It's not the prettiest profile, right? All right. All right. So let's recap what happened Friday. Now, let me remove this merge so I really can just look at Friday by itself. All right. Let's look at the Friday and what we did. All right. So Friday opened up. Wait a second here. Sorry, folks. Hold on a second. This is Friday. This is Friday. Here we go. So Friday opened up here, right? And you kind of consolidated, pulled back, and then you went up, and then you just fell back, right? But then that really doesn't matter, right? Because the overnight on Sunday had this nice big move here. Boom, brought all the way up to here. All right, so now we merge the next, and now we look at what we're doing today. This is the price right now, 58.94. 58.94. Okay. And I just showed you on the hourly charts a lot of levels that I said that I'm going to pay attention to. The most traded price of the month, the most traded price of the week were sandwiched in between them. Remember, 59.08 right there. That's the level. All right, over that I got to be bullish. All right, in between the 58.60, which is the most traded price of the week, you're right in the middle of a chop zone. I hate it. I hate that location. Right? I don't like it. Now, what else am I going to look at? We opened up here. We're in the middle of this overnight. So you got longs and shorts equal. Again, I don't like that. All leading to indecision. Okay? Now there is demand here. Okay? There is demand there. There's demand here. Okay? But the levels I'm really paying attention to is your 59.08, most traded price of the month, your 58.60, your most traded price of the week. Okay? So, I don't really want to be that active inside this area. Okay? And the overnight lows, 58.62, right there, what I want to do with those is that's what I call a confluence low. So the low of the overnights line up with the most traded price of the week. Okay? So bulls need to defend this level. Okay? The 59.08, right? Bears want to defend this level. So in between here should be noise. Okay? You want some acceptance above or below. So that's pretty easy for me to just sit back and come up with scenario, right? Pretty easy. You can see the most traded price of the overnight is pretty much the most traded price of the last month. Okay. Now I want to mention this here. You do have single prints down here. Okay. Now single prints, notice the thin volume here. The thin volume here. These single prints represent emotional buying. Okay. This is from Trump's EU tariff pause. So you can see the market ripped up. Okay. The market ripped up here. Okay, now, what do I always say? I got to bring my Elfie in the mix here. All right, that's your elephant being held up by a toothpick. Now, should a toothpick hold up an elephant? No. Okay, it should not. But if it does, it's bullish. Okay, so I'm cognizant of this single prints below this level because this level, okay, if I'm just going to draw, if you want to talk about that elephant, right? Let's just say the elephant's yellow. This is all the price action. Okay, that's your elephant. Here's your, I'm not going to draw a trunk. I'll draw an ear and a trunk here like that. That's your elephant, right? Here's your toothpick. All this price action is being held up by this little toothpick. Okay, a weak market will break this confluence low, the overnight low, and the most traded price of the week, and rip down to where? The most traded price of the rolling year, 58.20. Okay? A strong toothpick that should not hold up an elephant will find support here, and then that's bullish. Okay? Just want to point that out to you guys. All right, so we're going to come up with scenarios right now based on that. All right? We're going to come up with scenarios. All right, let's do the ES scenarios here. And we're going to start off with a bull scenario. Okay, we're at the midpoint of the overnight session. Ugh, it's a horrible location. Horrible. Okay, you know, we do have a little bit of a most traded price right here, about 58.84. Kind of makes sense where we're hanging out there. Okay, but what I would be looking for, if I'm bullish, right? I would love a push down into this demand. Okay, and test this area. And remember, it's never perfect. Could be perfect. Could land here, do a lower high, and then I would be long into target 59.08. That would be a nice trade. Now, it's gravy if you come up, pull back, start to hold 59.08. You have a chance to move up higher to 59.40. to 59.40. Okay, now there's always a bear trap sometimes in these scenarios. So what I would say is this: if the market isn't that weak, it's kind of neutral, and we really quickly test down here to these single prints. Remember I said single print support equals bullish, and you rip above this level, that could be your long as well. Okay, honestly, it's probably all I'm interested in. If we push up here and we hold, that's a poor, to me, long. I'd have to see super strong internals in order to get involved with that. All right, so now we're going to go to the bear side. Okay, all right, so it's just going to be inverse. Okay, let's say the market rips up here to 59.08, the most traded price of the month, and it does one of these. Whoop, can't find acceptance, comes back through and starts to hold. Well, guess what? All longs from here and here are going to feel that pain. They're going to have to cover their positions, and you're going to make your way down to this confluence low, 58.62, which happens to be the overnight low and the most traded price of the week, right? Then if the market is weak and you rip down and start finding acceptance down here, you have single prints. Okay, if the market continues to get weak, you are going to rip down into those single prints and find yourself at the most traded price of the rolling year. 58.20 also happens to be the anchor V up of the month. May's anchor V up is 58.05 around. Okay, that's kind of what I'm interested in. That's your ES. Moving on to the NASDAQ. All right, let's look at the NASDAQ. Remember, the overall structure is different. The immediate structure is kind of similar with that inverse head and shoulders. Okay, here's your NASDAQ. Let's look at it together. Okay, now profile-wise, it looks a little different. Okay, the weekly profile, rolling profile. This has more of a bullish imbalance to it. Okay, you got some excess here, you got value, and you got an incomplete profile to the upside. Okay, incomplete profile to the upside generally means higher prices to make that distribution even, right? So remember what I said: major levels, 214 around right here, that's your most traded price of the month and of this year. Big price. Okay, then you have your 212.50 is your most traded price of the week, and price is right there in between both major levels. Horrible trade location. Horrible. It's just the worst, right? I don't like it. So let's clean this up. So we got a big level here we're going to have to talk about. Okay, then we have another level here. Okay, now notice the most traded price of the week doesn't line up like the ES did beautifully here, right? So same concept really. Okay, same concept really. All right, because it still does line up with something, and I'll show you in a second. Okay, so like I said, this is a chop zone. Really don't want to be active too much inside of it. It's going to chop you up. It's going to chop you up. Okay, now the other level, we have a demand zone here. At the bottom of this demand zone, you do have the overnight low, obviously, and guess what's here? You have those single prints, the emotional buying from the Trump pause. Okay, so this area happens to be another area that could be supportive. Remember what I said, right, with that elephant on a toothpick. If the toothpick holds up the elephant, which it should not, that is very bullish. Okay, that is very bullish. And that move has to be quick. I don't want to hang out down here because that means the market's getting weaker. Okay, that means the market is getting weaker. All right. Well, so let's get right into the scenarios here. We can wrap it up. All right. So let's go to the bull side. Okay, because we are inside chop. All right. So right here, man, I really don't like this. So you do have a demand zone here. So what I could see is I don't want to do business usually in here. I want to see some kind of test of some levels, right? So we could get a, oh boy, that's too big. I don't know what that was. All right. So we could get a push down here, right? You do have the week to day VWAP right here. You can get a push down into here, this demand zone, which would also encompass the overnight low. That would be something that has to happen quick. Recapture the week, most traded price of the week. Now you got that big level, the most traded price of this year, 214. You need to find acceptance over that level. Push up into here and find acceptance. Now, you have a big resistance level in this market around 215.60. 215.60 has been resistance multiple times here to the left. This your shot. That's last week's highs to try to go higher. Don't know if that's in the cards. Okay? But that resistance, that gets broken, it's going to be a big move for the NASDAQ. Okay? Now, one more bear trap scenario. If we just, boom, fall apart, boom, hit these single prints and you bounce, you still got to get through this, but you could possibly move to here. Okay? It's kind of all I'm interested in. And again, it has to be internals. I have to drive my trades. Okay? Come, to my Discord and you'll see exactly what side of the fence I'm on. What am I seeing? Okay? So that's bear side. I'm sorry, that was bull side. Bear side. Okay, for these bears. Price is right here. I would love to go up into this big monster level. Now, I don't know how many people know this is the most traded price of this year, or it's a magnet. It's the most traded price of the month. Okay? Come into here. You do have supply right here. If you fail, okay, look, you got longs from here, longs from here, longs from here, getting paid. You probably are going to reach at least to here, the most traded price of the week. If you take that out, you're going to test this low, 211.42, right? If the market is weak, those single prints don't stand a chance, and you are going to go down and test the overnight lows from Sunday. If you break that, you could find yourself at the 208s. Okay? And of course, you still have the most traded price of this year, let's call it 207 down here with the month to date VWAP. You could find yourself down here. Okay? Who knows? Now, you could also just start out here, break these lows, hold, and go low. Okay? Now, door number 3, I didn't really talk about that much, but I should have. Door number 3, you have a chance to do this today. Go up, you fail. You go down, you fail. You go up, and you start to just move into this chop city today. That is a big chance. It's Monday. That's a good shot of it too, just because you're in this chop city. All right. So that is the analysis for today. Please smash that like button. That would mean a lot to me. All right. Now, of course, I would hope you could join me every day. Do this in the morning, give you the market story, the leaders, the laggards, the market news, the economic calendar, some earnings calendars. Then we go over the daily charts like we did. I gave you the long and short trade scenarios. Okay, I gave you the long and short trade scenarios. Now, real quick, what I didn't do, let me do it really quickly. Let me show you here. Just real quick, my little trade, which is a nice trade, obviously, right there. All right, I'll show you what I did in the Qs. Now, why the Qs? The Qs are relatively stronger. So, let's get a white here just to show you really quick what I did. Okay, so I waited patiently for that move. You see this gamma level, 507? All I cared about is when the market pushed up, that we pulled back. I got long right here. I took profit right here, and I was done. 2 to 1, I was done. So, however you want to look at it, 200% return, 2 to 1 risk to reward. All right, that was my trade, and look at that happened in about, entered here within 15 minutes or a little more and change. I was done. Obviously, could I have held? Right, entered here. I could have held. I could have took off 75%, probably held my stop loss, moved it here, and I would have got it all the way up almost to 512. Yes, I could have, but I pretty much didn't know, going into the holiday weekend. So, but the internals did show that the market should have done that, and it did. Okay, So that was my trade. So again, hope I really enjoyed today's analysis. All right, we have our plan. Remember, no trade's a trade. Hope everybody stays green today. And if you want, of course, you said I'm going to update everybody what I see. Confluence Trading, my Discord. Go to my YouTube homepage, click on the link, come join me. All right. And if I see you there, I see you there. If I don't see you there, I'll see you tomorrow.